Futures trading involves substantial risk of loss and may not be suitable for all investors. Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Wednesday, November 26th, the day before Turkey Day, and because of that, we're going to shoot this video while the markets are still open, so we'll not have closing prices today, but that means we can just jump right into the charts. To kick things off, we've got the March corn contract pulled up here. And, going back to Monday's video and what we talked about in our Grain Express, which is written commentary that goes out each and every morning, we talked about consolidation really being the key. I thought that was going to continue to be the trend in today's trade, but that was not, obviously. Got a big move higher after holding trendline support, which was really a must-hold level from the technical standpoint. We got out above old support, which is now resistance. That's the 50-day moving average and the low end of this range through the first part of November. So that's 440, 442. We got out above there, and that spurred additional technical momentum back above the 20-day moving average, which comes in just near 444. This certainly keeps the chart pretty interesting and I think favorable for the bull camp. Are we going to run away to the upside? I would not be holding my breath for that, but I do think there is still more upside momentum in this corn market, as we've talked about for the last couple of months. Really, I think stair-stepping our way higher in a lot of these grain markets could be the potential trend, not just to round out this year's trade, but to start next year's trade as well. One of the things that we're looking at in the corn market outside of just outright futures is a spread between March corn and December 2026 corn. We'll jump over to our portal on bluelinefutures.com to show you information on that. All right, so here we're in the Blue Line Futures portal. And again, if you have not signed up for this yet, access to this, got a lot of great information, not just in the grain markets, but a lot of other markets as well, energies, metals, etc. Here we posted a seasonal trading opportunity. This is not a recommendation, just an opportunity, something to keep on your radar and to take a look at. Seasonally, this spread between March and December starts to firm up quite a bit in December, and really through much of January as well. We did some back testing data over the last 15 years, which shows some pretty good correlations on that front. And then looking at the daily and weekly charts as well, I think there's pretty good potential. So if you've got any questions or want to talk about that potential trade setup, don't hesitate to reach out to our trade desk. We're always available to talk about different strategies. You can also email info@bluelinefutures.com for more information. If you want to learn more about that spread and the history of it, you can head over to that portal and find that information there. All right, now that we covered the corn market, we're going to jump over to January soybeans. January soybeans still in that meat grinder box that we've been talking about for really the last couple of weeks. We got towards right at the upper end of that. We outline resistance is 1135, 1137. The high today, 1135 and a quarter, and that is derived from those highs at the start of November. If we fizzle out here at 1135, it's not going to be a great look on the chart, as you have a potential head and shoulders formation building. The weekly charts, again, remain a little bit suspect as well, but it looks like the market's just kind of tethered to that 20-day moving average, which is this purple line right here. So, I think you can make the case that we break out from here. I think you could equally just make the case that we break down from here. But until we break out of the meat grinder box, I think sideways in this range is going to be the trend going forward. It is nice to see China showing up and buying some U.S. soybeans, especially at a premium to Brazil. The fact that they're back at all is certainly a silver lining, and I think keeps some support in this market, even if we do break below the low end of this range. If China's willing to buy U.S. beans at a premium, I'd imagine they're willing to buy it at par or a discount as well. So keep that in mind going forward. Jumping over to the wheat market. Had a nice morning. Tested and held the 50-day moving average. Yesterday, we got back right there. And then today's trade, a little bit upward momentum. We're starting to see a softening trend, though, really from these highs at the start of the month. So a little bit more concerning price action and the chart in this March Chicago wheat contract. We need to see closes back above this blue line and purple line. That's 120-day moving average, the 100 and the 20-day moving average. That comes in here 547 to 549. So nice to see some positive momentum over the last couple of sessions, but the bulls still have their work cut out for them to negate some of the bearishness that's taken place over the last couple of days. Now, jumping over to the livestock side of things, green on the screen. Great to see after a lock limit lower close on Monday across the board. And one of the things we talked about in Monday's video was the fact that those options on Monday when we were lock limit really not pricing in a whole lot of panic, not the amount of panic that you would think for being lock limit lower all day. We also talked about the volume that was traded in that April live cattle futures contract. It was more volume than traded on November 18th and about the same amount of volume that was traded on November 17th when we were trading in about a $6 range. So there was somebody there picking up the scraps when people were trying to get out. That was ultimately encouraging. And then on Tuesday's trade, really not a whole lot of follow through to the downside. And then we saw, obviously, today's trade. So yesterday's trade and Monday's trade combined, to me, that is kind of a sign that a lot of the froth that was in this market at these highs from potentially over-leveraged fund positions has been alleviated. And now we can get back to trading some sort of a normal market here in the near term. The big thing, obviously, still lingering over the cattle market, particularly in the feeder side of things, is the South American border with Mexico. If that reopens, obviously, that opens the door for more downside potential. However, there was a podcast out yesterday on Tuesday with Secretary Rollins, who seemed to indicate that, yes, it's not a matter of if they open it, it's a matter of when. After listening to that podcast, it doesn't really sound like it's something imminent. Don't go put me on record by saying it's not going to happen this year or early next year, but didn't really sound imminent to me. So hopefully that can at least kind of alleviate some concern that they're going to open it anytime soon. And again, we can get back to kind of trading the fundamentals here near term and start to build a little bit of a range in this market. Now, wrapping things up in the lean hog space, patience pays finally, getting out above the 50% retracement here and opening the door for some potential upward movement. I continue to be pretty optimistic on lean hogs that we can, get a bigger relief rally out of here. It hasn't been a great trade or the easiest trade over the last couple of weeks, but the momentum starting to firm as we're carving out a little bit of low here in the near term. Need to see consecutive closes out above that 50% retracement in the April contract. That comes in near 84.75. So that's what we're looking at into Turkey Day. If you've got any questions, do not hesitate to reach out. We are always ready, willing, and able to help. Our desk, 312-278-0500. Again, any questions, you can also email info@Blue Line Futures. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.